Trump speaking about tariffs, and Greenland's map on a news ticker. The silver market as we knew it is officially broken. Right now, a massive geopolitical storm is brewing between Washington and the London Bullion Market Association, LBMA. And at the center of it all, a 10% tariff linked to the most ambitious and controversial real estate move in history, the Greenland acquisition. If you're holding silver or even thinking about buying the dip, you need to stop everything and look at the data coming out of London today. Because for the first time in decades, the global supply chain for precious metals has been sliced in half. Welcome back to Deep Insights Money. I'm your host, and today we are breaking down why the Greenland tariff isn't just a political headline. It is a financial earthquake that just cut off the world's biggest silver hub from the U.S. economy. Transition to a clean chart showing silver price volatility. For weeks, we've heard the rumors, but now it's official. The 10% blanket tariff on European imports, designed to pressure the EU over the Greenland standoff, has hit the LBMA where it hurts the most. We're talking about a complete decoupling of the physical silver price in London versus what you're seeing in New York. But why is this happening now? And why is silver the sacrificial lamb in this trade war? In this video, we're going to peel back the layers of this crisis. We'll look at the secret meetings in London, the supply shock hitting US mints, and more importantly, what this means for your portfolio over the next 30 days. A map showing the flow of silver from London to the US, with a giant red X over the Atlantic Ocean. Narrator. To understand why this is a disaster, you have to understand the silver pipeline. Most people think silver just appears at their local coin shop. It doesn't. It flows through a very specific, very old system called the LBMA in London. The LBMA is the heart of global silver liquidity, but with the new 10% Greenland tariff in effect, that heart just skipped a beat. For the first time, US importers are facing a massive tax just to bring physical silver bars into Chicago and New York vaults. Think about the math here for a second. In the world of precious metals, a 1% or 2% move is huge. A 10% overnight tariff? That's not a tax. That's a wall. It has effectively killed the arbitrage between London and the COMEX in New York. Visual close-up of a silver bar or a refinery floor. I was talking to a contact in the refining industry this morning, and the sentiment is pure panic. The LBMA has been the primary source for industrial silver, the stuff used in your EVs, solar panels, and high-tech weaponry. By cutting off the LBMA, the US isn't just fighting a trade war over Greenland. It's accidentally starving its own domestic industries. And here is the kicker. Silver isn't like oil. You can't just flip a switch and pump more out of the ground in Nevada to replace what we lost from London. Mines take years to spin up. So what happens when the world's biggest silver hub is suddenly off limits? You get a physical disconnect. We are starting to see premiums on silver eagles and junk silver skyrocket. While the paper price on your screen might stay suppressed, try finding a physical kilo bar in the US right now without paying a 25% premium. It's becoming impossible. Headlines about Greenland's mineral wealth, uranium, rare earth elements, and silver. Now let's talk about the why. Why is Greenland the hill the administration is willing to die on? It's not just about territory. It's about the resources hidden under the ice. Greenland is rumored to sit on one of the largest untapped silver and rare earth deposits on the planet. By imposing these tariffs, the US is playing a high-stakes game of geopolitical poker. The message to Europe is clear: give us a seat at the table in Greenland, or we will tax your financial hubs into oblivion. But here's what the mainstream media isn't telling you. The LBMA isn't just sitting back. They are already looking for backdoors through Asian markets like Singapore and Shanghai. We are witnessing the balkanization of the silver market. Instead of one global price, we are moving toward a world where silver costs one price in London, another in Shanghai, and a much, much higher price here in America. News headlines from January 2026 showing Trump's Truth Social posts about the 10% tariff on Denmark, France, and the UK. Narrator. Now, let's get into the weeds of why this is happening right now. On January 17, 2026, President Trump dropped a bombshell, a 10% blanket tariff on 8 European nations, including the UK, France, and Germany, starting February 1st. And the reason? They're blocking the US purchase of Greenland. But here's what the mainstream media is missing. This isn't just about national pride or real estate. It's about resource sovereignty. Greenland is home to some of the largest untapped silver, uranium, and rare earth deposits on the planet. By imposing these tariffs, the administration is essentially trying to starve the European markets into submission. But in doing so, they've accidentally created a silver squeeze that is unlike anything we saw in 2021 or even 2025. A comparison chart showing silver prices hitting $93, $94 per ounce in mid-January 2026. Look at the numbers. As of January 19, 2026, silver has already blasted past the $93 mark, hitting record highs. Why? Because when you tax the LBMA, the world's biggest silver hub, you aren't just taxing a metal, you're taxing the entire tech industry. The LBMA hasn't just been a trading floor, it's been the vault of the world. With these 10% tariffs set to rise to 25% by June, the message to silver investors is loud and clear. Physical silver is about to become a localized premium asset in the United States. We are seeing a massive trust shock within NATO. European nations are already discussing retaliatory levies on over $100 billion of US goods. We are moving toward a balkanized market, where the price of silver in London is completely disconnected from the price you pay at a dealer in Texas or Florida. Images of industrial use. Solar panels, EV batteries, and high-tech defense systems. And don't forget the industrial side. Silver was officially added to the U.S. critical minerals list for a reason. From Tesla's procurement challenges to the massive demand for solar equipment, the U.S. needs this metal. By cutting off the LBMA supply chain over a Greenland dispute, we are looking at a structural deficit that could last through 2030. Pods 1. If you think $90 silver is expensive, just wait until the 25% tariff kicks in this summer. We aren't just looking at a price increase. We are looking at a physical shortage where industrial giants will be outbidding retail investors just to keep their factories running. The $100 prediction and your survival guide, 14 OS 18 SAO, bullish price chart with a target line at $107 and $120 per ounce. So, where does this leave us? Analysts like Robert Kiyosaki and major precious metals strategists are now eyeing $107 per ounce as the next immediate target. With the Fed already signaling potential rate cuts to combat a cooling job market, we have the perfect storm: high tariffs plus geopolitical chaos plus a weakening dollar. Here at Deep Insights Money, we don't gamble, we prepare. First, look at the premiums. If you see physical silver available at anything close to the spot price right now, buy it. The paper silver market on the COMEX is likely to face a massive delivery failure as the LBMA supply dries up. Second, watch the June 1st deadline. If the Greenland deal isn't reached, that 25% tariff will turn silver into a luxury good. We could see a scenario where the street price of a silver eagle hits $150 while the screen says $90. Visual, host looking directly into the camera, serious expression. The Greenland tariff just killed the old silver market, but it's birthing a new era for precious metals. This is no longer just an investment. It's a hedge against a world that is literally being redrawn. Make sure you're subscribed to Deep Insights Money as we track every move in this Greenland standoff. Hit the notification bell, because in a market moving this fast, information isn't just power, it's profit. What do you think? Is the Greenland purchase worth the chaos in the metals market? Let me know in the comments below. I'll see you in the next one.